Welcome to Secure Money Mindset, the ultimate podcast for financial planning tips and strategies. Our episodes are designed to be concise and to the point, lasting no more than 30 minutes. Each episode features seasoned advisors from Secure Planning Group or an outside financial specialist discussing crucial issues and providing actions to consider when addressing your top financial concerns. We value honesty and transparency, meaning we present both the good and the bad news in a clear and concise manner. Our goal is to provide you with reliable insights and practical guidance. Be sure to hit the follow button to stay up to date with our latest episodes. For more information, please visit our website at securepg.net. Let's dive into this week's episode of Secure Money Mindset.
Hey everybody, and welcome back to the Secure Money Mindset. With us today I have Matt Crescenzo, one of our financial advisors here at Secure Planning Group. And the topic of the discussion today is disability insurance. So kind of jumping right into it, Matt, thanks for joining us today. Wanted to just kind of start out with just if you can maybe define what exactly disability insurance coverage is.
Yeah, disability insurance is the type of coverage that protects you due to an illness. So a lot of people tend to think that there's going to be some type of accident that typically occurs, but it's really due to any type of illness or injury that comes from either at the workplace or outside of the workplace.
So in terms of the instruments, or like if you could just talk about like how insurance comes into play when we're talking about disability coverage.
Yeah. So insurance, which most people know, is an important tool for any type of financial planning or any type of planning that's out there. What's particularly important about disability insurance and the way it works is that it is there to secure your income, which we all know is the most important thing, in any type of financial planning or process. That the way this is structured is it, and like any other type of insurance, is there that if God forbid something happens to you, there is a policy in place that is going to pay out a certain percentage of your income.
Okay. And then in terms of determining how much coverage or how one could qualify, what are some of the factors that kind of go into that?
Yeah, so the hardest thing, sometimes to figure out is people when they go through that is how much, should I have, and one, what is the cost going to be, right? Those are always the two things that tend to go together. It's actually very easy to determine how much you should need because it's really just based off of the lifestyle you want to live or even just your current expenses now. So when keeping it very simple, we just look at what is the need that is there today between you, if it's yourself, or your significant other, as well as if something were to happen to one of you, what is my income that's coming in? And also, is that now covering what expenses are that are out there?
Now, one thing that comes up when we're talking to younger folks or people in general is they bring up the fact that they have coverage through work. Can you maybe talk about the difference between the coverage you might have through an employer versus coming and working with someone like us?
Yeah, so having any type of benefit that comes from work is a great benefit to have, typically because it is employer paid. So right, we're never going to tell anyone not to take a benefit that they're not paying for, right? That's a great benefit that's always being added. One of the big misconceptions or misunderstandings of that is that is going to typically be a taxable benefit to yourself. Since it is being mostly paid by the employer, or typically 100% paid by the employer, then that becomes a taxable benefit to yourself. So whatever the benefit amount you think you have, that is not the full amount you're going to be receiving, right? That's the tax-free version of it. When done individually and paid personally, then it's going to be a tax-free benefit. Another big thing about that when going through an employer plan is that what happens if you're no longer at that employer later in life? Right? That policy can go away. So having an individual type of policy in place is a very helpful tool because once you've established that, that's going to follow you wherever you go.
Right. And I guess like that goes back to like the calculating how much coverage you need. Can you maybe just talk about like the specifics of within those employer plans versus a plan that you would go and acquire yourself? Is it based off of a percentage of income, or how do they calculate kind of the coverage?
Great question. So depending on the type of style you have, right? If you're just a straight W-2, meaning you just get paid a salary, it's a very straightforward process, right? They're going to pay you typically up to 60%, up to certain limits, depending on the type of policy that it is of your income. However, if you are primarily someone who makes money off of commissions, sales, things like that, typically an employer plan only covers your W-2 wages. So it is something to always take into consideration, and is actually a very important part of it, is that if you earn most of your money through commissions or a large portion of it, that is most likely not being covered under your policy through work.
Right. Now, when it comes to like underwriting and things like that, like what are some of the personal factors that go into all that?
So like any type of, if you've been through the life insurance side of things or other types of insurance, health insurance, it is a type of policy that is underwritten. They have gotten a little bit better at that process. We know it can be a painful one sometimes, but they are going to take into consideration past history. So if there's been injuries, this is the bigger difference between life insurance, is that injuries such as, a torn Achilles, back problems, past history like that is going to come into consideration because we're talking about a disability, right? And, the majority of disabilities that come are due to back problems. So it's very likely that if there's a previous history of that, that's going to come into consideration. So it's always going to go through what's your medical history been, any past injuries you have, and also not only physical, but maybe mental or emotional, on that side of things.
And then I guess getting a little bit into the weeds, but like what you're kind of alluding to it in your previous answer, but what would qualify someone to be able to utilize the benefits within that plan?
Mm-hmm.
So like what qualifies you as disabled, so to speak?
Yeah, look, depending on the type of policies, and that's, a very important thing, and why you want to work with a professional in doing it, is that depending on how the policy is written, there's different types of disabilities that are covered or different things that happen. What is called own occupation is referred to as the occupation you are doing today versus any occupation. So there's a big difference between those two, where it is in any type of occupation, if that is how it's written into the contract, is going to be that, hey, right now, say I am a surgeon, right? And I can do a specific surgery. If I can no longer do that surgery or that type of job, but can do any other type of job, and that even means working at McDonald's,
Mm-hmm.
you are not considered disabled in that point. Where when it's own occupation, that is a very key feature that most policies should have. That means the occupation that you have been doing and are primarily doing is the one that's going to be covered. So in that same scenario, if you are a surgeon or perform any type of professional service where it's a very specific job, if you can no longer do that job, you can still be covered by the disability, even if you can do another job. So there's some key differences there, but it's very important to know that.
Yeah, and I think any of these detailed questions, really, to your point in your answer, is working with a professional helps you navigate all the unknown. Was there anything else that we didn't necessarily touch on that you think is like very important for people to know when they're looking into it?
Yeah, so there's a couple common misconceptions when looking at disability insurance. The number one we get is the cost of it, right? Everyone sees it that, hey, it's too expensive for me to have, every time I've looked at it, it seems to be very high. Well, when you look at that compared to other insurances, right? We have car insurance, we have life insurance, we have insurance for about everything else, that it's really only anywhere from about 1% to 2% of your annual salary, when you look at that, depending on the amount of coverage you need and what your income is. So, that being said, it's the one thing that you probably should have the most, because if you think about it, and we use this analogy a lot when we talk to people, is that if I had a machine at home, and let's just use numbers of making $50,000, $75,000, $100,000, that machine printed money every year, would you insure that machine? Typically, the answer is going to be yes.
Yeah.
Well, you are that machine when you look at that. So not insuring your income is one of the biggest downfalls we see to any type of financial plan that's out there, because you can have all the goals you want to have set up, savings goals, retirement goals. Hey, I'm going to do all these things, but if you are disabled, you're not going to be able to achieve those goals because you're not going to have the income to help support that. What also entails and follows that is a lot of people depend on Social Security, if that's going to be one. Hey, Social Security is there in case I get disabled, right? You talk about that. Well, Social Security is notoriously known for being very difficult, especially the initial process. It's around a 70% denial rate the first time you go through that. So it's not the easiest process to go through. And if there is a disability, there's typically an immediate need for some of that income, right? You still have bills coming in. Unless you have a very large emergency fund that's there to help get you through that, it's going to be very important to have that.
Absolutely. Was there anything else that we didn't necessarily cover or touch on that you think would be important?
Yeah, I think another big misconception, which is, again, this is our role when we talk to people, when you sit down with us to go through, is talking about the things that you're not thinking about. So people think, one, my job's not very dangerous. I'm not going to get hurt. Well, the majority of disability claims that happen occur outside of work.
Yeah.
So you think about driving to work every day. That's one of the most dangerous things you do, right? A lot of them come from car accidents. So outside of work, it's very important to think about that when you go through it. Also, another big misconception is nothing's ever going to happen to me, right? That's the thought that we always see, but our job is to look at the numbers. And when we do that, so it's about 40% of men throughout their life are going to be disabled at one point, and 53% of women at one point are going to be disabled. So when you look at that and say that's about almost 50% for every single one of us, it's very silly not to be thinking about putting something in place. But that's why you want to talk to a professional to go through that and have that explained to you.
The numbers are staggering, and then when you compare that to the coverage costs of only being 1 to 3% or whatever you said of your total income, it's just, again, it makes sense, but unless you have someone to walk you through it, you don't know what you don't know. So I appreciate you talking through that, and we hope that it was super helpful information. If you guys have additional questions about disability coverage or anything that is financial planning, we encourage you guys to reach out, and we hope to be in touch, and thank you guys for tuning in.
Thank you.